Good afternoon, everyone. Welcome to today's presentation for HR Assured. My name is Wes O'Donnell. I'm the National Workplace Relations Manager with HR Assured. Firstly, apologies that my colleague Nick Tinley was unable to attend today as scheduled and planned. However, Nick's been called into a further meeting and asked me to step in on his behalf. We are wanting to talk today predominantly around the introduction of the legislation yesterday concerning the JobKeeper arrangement. I think that everyone was keenly anticipating the introduction of the legislation and to have a few of the questions that they had addressed. So we're going to go through a recap on JobKeeper generally, together with an understanding of some changes with the introduction to the Fair Work Act, which was announced yesterday, which are really, I think, quite innovative, quite ingenious, quite helpful for business, which is great. So we're going to go through that as well as talking around what we see as the fundamental next steps and provide an opportunity for a Q&A at the end. We've got an hour scheduled for the discussion. More than happy for you to send through questions as we go through. And I will review the questions wherever possible and try to answer them as we go through if it's appropriate and possible. But we will, of course, leave some time at the end to ensure that anyone that has Q&As, we can answer them specifically. Before we go on, I think it's relevant just to ensure that everyone has an understanding that the discussion today will be predominantly associated with the JobKeeper scheme. And as such, we're talking predominantly in relation to what we call eligible employers, that is, employers eligible under the JobKeeper scheme. And we'll talk about eligibility requirements in a moment. However, in that context, we need to ensure that everyone's aware that there are a cohort of businesses which are not applicable to the predominant nature of this discussion today. And they are non-national system employers. So they are people or businesses rather in Western Australia who operate as a sole trader or through an unincorporated structure. Those particular businesses are not considered national system employers and as such are under a different arrangement. Under that arrangement, we must say that there are, in the general terms, no stand-down provisions under the WA legislation, meaning that WA system employers are effectively required to enter into a personal arrangement with employees to verify their terms and conditions of employment or to make redundancies. Predominantly, as I said, we will be talking about businesses which are considered eligible under the JobKeeper scheme. However, for those which are not eligible under the scheme for whatever reason, and again, we'll discuss the eligibility criteria in a moment, it's important to recognise that many of the all of the amendments to the Fair Work Act which we're discussing today does not relate to you. And as such, the options available to those businesses remain either a stand down in accordance with the current Fair Work Act, where there is a stoppage of work due to circumstances beyond your control. Secondly, a variation to terms and conditions of employment by mutual consent, or thirdly, redundancies. So I just wanted to make that clear that we will be predominantly talking about eligible businesses under the JobKeeper scheme, but there remains a cohort of businesses which sit outside that framework, and therefore different considerations and options apply to those businesses. The first thing I wanted to outline was a little bit of information from the explanatory memorandum which was released yesterday, which supports the legislation introduced into Parliament. For those that aren't aware, an explanatory memorandum is a supporting document which sits beside the legislation, which gives an overview of the nature and effect of the legislation. And quite usefully, it outlines that the proposed amendments to the Fair Work Act temporarily enables eligible JobKeeper employers to create increased flexibility around an employee's hours of work via new arrangements which enable a direction to stand down or perform duties at a differing location than what they are used to. It also enables employers and employees to make arrangements for increased flexibility around annual leave arrangements and days and times of work. It also goes on to say that the Fair Work Commission will be able to resolve disputes, including by arbitration. So really good summary of what the legislation introduced, and that is the government has introduced a scheme by which it creates arrangements that an employer can direct employees to change their regular pattern of work, their regular duties or location of work, together with creating a framework to enable an employer to request variations to someone's agreed pattern of work or take annual leave, etc. So through this arrangement, it's contemplated that the employees will remain connected with the workplace, and that's the language that the government continues to use, and remain productive, performing services of value, not just sitting at home receiving $1,500 per fortnight, but rather connected and actively engaged in a business providing services of value, to ensure that there is a close ongoing employment relationship to avoid recruitment when we come out of this pandemic, but also that businesses are already geared to take advantage of the upswing once the pandemic passes. So really telling, I think it's really clever, rather than a process of a social security benefit. I think it is a really clever initiative to ensure that businesses can effectively take advantage on the upswing. I also think it fundamentally changes the dynamic of conversations that you're having with your people. Prior to the introduction of the legislation yesterday, a lot of businesses were having discussions with employees concerning a mutual variation to their terms and conditions of employment, such that they would agree to come back off stand down and perform differing duties of value. That process has now fallen away, and in effect there is an ability to direct employees back into the workplace. So against that overview, we'll go through what this means for you and your business in greater detail, and we'll go on from there. So first thing is the employer eligibility requirement. And the legislation continues to talk about a qualifying or eligible employer. So quite simply, the eligibility requirement is that effectively there is an application condition. And I have to say that there is not any requirement upon a business to apply. It is completely voluntary. Businesses do not have to participate in the scheme should they wish not to for whatever reason. We already know that over 600,000 businesses and sole traders have already expressed an interest through the ATO website. There is a formal application process. The application process proper and the evidentiary requirements which are needed through that process have not yet been disclosed by the ATO because the process is managed by the ATO. We are expecting further details upon the rules to be released at some stage today. However, there is, and I'm not sure if any of you have done this yet, if not, I'd highly recommend that you do so. There is a button on the ATO website whereby you can express your interest to apply. As I said, over 600,000 businesses and sole traders have already done so. I'd recommend you doing it if you haven't already. That way, the ATO will basically have your details and they will communicate with you directly once further information has come through concerning the application process, when it's open, eligibility requirements, evidentiary requirements, etc. In general terms, however, the employer eligibility requirements are pretty straightforward. That is, any business with a turnover of less than $1 billion will require turnover to be reduced by more than 30% in a comparable period to 2019. Any larger business, that is a business with turnover of $1 billion or more, requires a turnover reduction of 50% or more. A recent amendment to the scheme earlier this week, was the introduction of a revised eligibility criteria for registered charities, who have a requirement to have a reduction in their turnover of only 15%. So that's an important concession. Note that it is a requirement for a registered charity, not simply a not-for-profit, which is an important distinction. So they're the eligibility requirements from an employer's perspective. I should say, however, that the JobKeeper scheme is managed or governed by rules of the Treasurer, which will be finalised and distributed by the Treasurer. In general terms, legislation can either be introduced, which is an Act of Parliament, or regulations. And in both cases, an Act and regulations need to pass both the House of Representatives and Senate, and then signed off by the Governor-General and entered into law. An alternative is that a minister has broad discretion to create and enforce rules. Those rules of themselves don't have legislative effect. However, they can govern arrangements established by an Act. What the government has done to increase flexibility through these arrangements is to not put any legislative detail to the JobKeeper scheme, but rather indicated that it will be governed and dictated and directed rather by the rules handed down by the Treasurer. We're expecting those rules to be tabled in Parliament today. We haven't seen the final version of them, but the Minister has broad power to vary the eligibility criteria throughout the course of the JobKeeper arrangements. We are hearing that the government is willing to explore alternative eligibility criteria where the operation of the scheme gives rise to any unexpected unfairness or exclusion. And there is already a natural ability through the management of the scheme for the Commissioner of Taxation to consider an exemption. We are hearing, again, that the government is taking a relatively broad view and a relaxed view to that discretion in the hope of bringing as many eligible businesses under. So what we can say is that in the event that, for whatever reason, you, your business, or the industry in which you operate generally does not fall easily within the eligibility criteria or you may be excluded, there is certainly the ability to lobby government or to seek an exemption by the Commissioner for Taxation, and we'd strongly recommend that businesses consider that given the financial relief which will be experienced through the subsidy arrangement. There is an important, as I mentioned, consideration of assessing revenue in comparable periods. As I said, the activity is generally governed through BAS statements. It's only in relation to Australian-based turnover, and it must be on a like-for-like basis upon a comparable period last year. Again, we're waiting to see the details through the rules. However, we already know that the Commissioner for Taxation has indicated that where a business is able to establish that a period, whether it be the period in 2019 or the period this year, is not comparable for whatever reason, then an application for an exemption should be made and due consideration will be given to that. A couple of examples made have been things such as the period of March 2019 was less than what would otherwise be experienced on average throughout the course of 2019. For self-employed individuals or sole traders, there may have been a period of absence due to parental leave, unpaid sick leave, etc. So those factors, if there are any factors indicating or impacting rather on the comparable periods, that again should be raised for the consideration of the Commissioner. Considering or taking into account businesses' eligibility, we then come into what we call an employee eligibility, and nothing's changed from previous discussions that we've presented. Broadly speaking, the eligibility criteria remains the same. That is, requirement to be employed as of the 1st of March 2020, employed at the time of payments, at least 16 years of age, permanent employee, full-time, part-time, or a casual who has been engaged on a regular basis for at least 12 months as of the 1st of March 2020. Australian citizens is a further requirement, or those holding a permanent visa, together with other categories such as those on a subclass 444, which is a New Zealand citizen. And there's a requirement that they not receive a JobKeeper payment from another employer. So this means that part-time employees, casual employees, etc., there is a requirement for the employee, in effect, to nominate their primary employer, and a JobKeeper payment can only be eligible from that employer. Predominantly what we're seeing is that the ATO is considering that election will largely be taken from an employee's tax file declaration form, and the employer, if there are multiple employers, who they elect to have the tax-free threshold taken from. So there may be a circumstance where an employee is not eligible because their primary employer is not an eligible employer. However, their secondary employment, their employer may be an eligible employer, but they lose out by virtue of their primary employment. So that's all pretty clear, established. I would imagine most of you are well versed with that through previous information provided and webinars delivered. What has been different, and we received general overview of the proposed legislation to be introduced, was the changes to the Fair Work Act for eligible businesses. Now, what effectively has happened is the government has changed on a temporary basis the provisions of the Fair Work Act for the following period of 6 months to enable businesses to have greater flexibility around employees who are receiving or eligible to receive the JobKeeper payment. And again, the purpose of this is to ensure that a business can engage with employees and ensure that they are providing services of value. So really, as I said, innovative, quite clever initiatives, but there are also, quite rightly, some safeguards within the legislation to ensure that any direction is effectively applied on a reasonable basis, and some certain other protections for employees. So we'll go through those in a moment. The first thing is that the legislation, or the revised Fair Work Act, outlines that an employer, and again this is a eligible employer, an employer who has made an application and that application has been approved, is able to initiate a JobKeeper enabling stand down. Yeah? Now, the language is the same, but the definition is different. So remember, we've probably informed everyone previously that a stand down currently under the Fair Work Act is a stoppage of work due to circumstances beyond the control of the employer. Yeah, that's different. Yeah, so what the amendments to the legislation have now introduced is, in effect, a secondary class of stand-down provisions where an employer who has been deemed eligible by virtue of the reduction in their turnover can direct an employee to not work or work reduced days and hours of work upon which they would usually work. And that's an important distinction we'll get to in a moment. But it's an employer's ability to direct an employee to work some or all of their regular pattern of work. An example, just to play this out, employee employed on a full-time basis, working Monday to Friday, 9 to 5. An employer is able to direct that employee to work Monday, Wednesday, and Friday, as an example. Or able to direct an employee to work Monday to Friday, but only 9 to 3. The intention of this is to ensure that there is, or releases, a cost-based burden from most employers. It releases an employer from the obligation to engage an employee on their pre-JobKeeper terms. What it means is we can bring people back into the workplace to perform services of value. Okay? So again, for those that have been stood down, it enables us to bring them back in. For those who have not yet been stood down, we are able to still issue this direction. Yeah? It's also important that we understand that, again, it's their regular pattern of work and it's a direction. Yeah? The direction, however, provided by the employer is subject to a test of reasonableness and consultation, which we'll discuss in a moment. A question just coming through on that point is what if you don't have the work for the employee to actively stay engaged at the moment? Could they not still receive the payment while sitting at home? Great question. Yes, that is, of course, the case. Remember, the JobKeeper enabling stand-down direction is a stand-down direction to work, not work some or all of their regular pattern of work. If you don't have work available for an employee, of course you're able to direct an employee to remain at home, and they will still receive the JobKeeper payment. I think, however, that doesn't necessarily address the intention of the legislation. The intention of the legislation is to ensure that they remain productive, viable individuals which are contributing to the business to ensure its success off the ramp up. So we're seeing a lot of businesses identify alternative duties which those employees can perform, which we'll get to in a moment, around introduction of systems, best practice processes, developing programs, whatever it may be, that may not necessarily be their standard duty, but adds value. And what I'm encouraging my clients to consider is, if you had the opportunity before the COVID-19 pandemic to get tasks or functions or programs or projects undertaken, but never had the capacity or cost to do it, now's the opportunity. Now you can actually align, the capacity that you have in your people with those projects that you've always wanted to get done, so that, again, you're in a very strong position to take advantage of the uplift once the restrictions are lifted. There is the requirement to have reasonableness. The other requirement is that the direction is enabling those duties to be performed safely. This is one aspect where we've seen a little bit of pushback with employees who are challenging any direction to return back to the workplace upon the basis that the workplace is not considered safe, in their opinion, in the context of COVID-19 and the pandemic which we're currently in. I just want to quickly address that, because that's a question that I'm getting a lot from clients. And my response is, regardless of the amendments to the Fair Work Act, our obligations as an employer remain, and our overarching obligation is to ensure the welfare and well-being of our employees. So we have an obligation to ensure that we are considering any particular risks or hazards within the workplace and implementing appropriate control measures to ensure that we reduce or eliminate those risks to the extent that is reasonably practicable. So one of the things that we need to do in the context of COVID-19 is to undertake that process. And in response to an employee's concern regarding the relative safety of the workplace, we would go through a meaningful discussion around what risks you've identified, what steps you've put in place, what personal hygiene arrangements are also in place, etc., to address those particular issues. Where we consider that we have effectively identified and limited or removed all risks to the extent that we can provide employees with a direction to work. Yeah? That's something to consider. The next thing to consider as well is that in most states now, public health orders have been issued relating to the requirement to remain at home. Now, in the context of work, those public health orders do state that an employee is to remain at home unless their role cannot reasonably be performed at home. So what we're saying there in the context of safety is address the employee's concerns, identify what steps and measures you've undertaken to eliminate or remove risk in the workplace. You'll be considering or outlining steps that you are or have taken to ensure that the workplace complies with social distancing requirements and maximum persons in any square meterage. And also remember to introduce in that discussion the requirements and obligations under the relative public health orders. But interesting that that word safe has been brought into the legislation, and I think that that's one aspect that some intelligent employees may advance as a basis for their objection in returning to the workplace. Yep. Through the legislation as well, it does outline that there is what we call payment obligations, and that is where an employer receives payment on behalf of an eligible employee, there is an obligation to pay that in full. It is a civil remedy provision upon which significant penalties may flow both to the organisation and individuals involved, where an employer fails to pass on all of the JobKeeper payment to the eligible employee. That's really important. The second thing to consider in terms of payment obligation is that the legislation states that an employee must be provided with their same rate of pay for the work performed. So another question which we frequently get in is, someone's paid over the minimum entitlements of a modern award, as an example. Are we able to effectively reduce their base hourly rate of pay to reduce our cost base at this point in time? In short, the answer is no. Even though an employee is paid in excess of the modern award, it's not an ability to pare that back. There is an express requirement under the legislation to maintain an employee's existing commercial terms in terms of their hourly rate. So an example which we've got there is that an employee ordinarily works a 40-hour week and is paid $1,200 per week. So obviously base rate of pay is $30 per hour. If the employer directs an employee to work 30 hours per week, assuming that they're an eligible employer, provide that direction, then the employee will only be eligible to receive wages of $900 per week. Yeah? Meaning that the employer maintains $750, an element of that, and then there's an out-of-pocket top-up which is to be applied. So just really clear, hourly rate can't be amended through that process. An interesting point as well is that where an employer provides a direction for an employee to work some or none of their regular pattern of work, the leave entitlements will accrue as if the direction has not been given. Yeah? In addition to that, redundancy pay and notice of termination, again, will be calculated on the basis of that notice of reduction had not been given. So an example of this is to play it through. An employee is a full-time employee working Monday to Friday, 9 to 5. An employer provides a direction, an eligible employer provides a direction to an employee to now only work Monday to Wednesday, 9 to 5. Annual leave, however, will accumulate on the basis of a full-time employee, 9 to 5, Monday to Friday. And in the event that the employee is terminated for whatever reason, whilst this arrangement and the scheme continues, then redundancy pay and notice of termination is calculated on the full-time entitlements. I guess this is just a logical, common sense approach to say that, effectively a direction is provided to work less than what an employee is contracted to receive or earn or work. And in the interest of fairness, an employee should work less or receive entitlements or calculate entitlements on that full-time basis, in effect. The other element which is really useful for employers, which was introduced, is that there remains the ability to direct an employee to perform alternative duties. This is a really sensible amendment to the legislation, because we've seen employees dispute any attempt to vary their contracted duties, inherent requirements under a job description, etc. And this basically removes any legitimate element of dispute, in that as long as the direction is reasonable, an employer can direct an employee to perform duties within their skill set to perform and within the scope of an employer and the business's operation. Now, effectively, again, what the government is saying with this is we're expecting that if employees are receiving the $1,500 per fortnight payment, that they be ready, willing and able to perform any function that the employer considers reasonable and within their scope of operations, which will assist them in preparing the business to take advantage of the uplift once the pandemic lifts. Really sensible. And I think that, again, the overwhelming majority of employees will be willing to support and assist an employer in this regard, but the introduction of this formality within the revised Fair Work Act removes any potential for significant dispute, or at least the requirement for mutual agreement between the employer and employee. Another aspect of the revised legislation is that an employer can again direct an employee to perform duties at another location, and that is another location where it is a reasonable travelling distance. So if it's not their place of residence, there is a reasonable travelling distance to that place, and the revised place of work is also considered safe. So again, really, really clever in that in the event that there is no work of a particular type at a particular location, then we can reasonably direct an employee to work elsewhere. And likewise, if we can't have an employee to perform work safely in one location due to social distancing issues or the floor space in a particular location, etc., then we're able to direct that individual to work at another location where work can be performed safely. So we've dealt with the ability under the amendments to the Fair Work Act to direct an employee to do certain things, and that is the ability to issue what's called a JobKeeper enabling stand-down direction, and in short, that's a direction to work none or some of their regular pattern of work, a direction to provide or perform alternative duties within an employee's skill set to perform and which are within the standard operation of the business, and also a direction to work at another location. So there's three areas where an employer can direct an employee to do certain things. There are, however, a number of other aspects where an employer can request an employee to do something. And the two aspects are relating to days and hours of work as well as annual leave. So in relation to days of work, a qualifying employer may request an employee to work a pattern of work, days and hours of work, which are different to their regular pattern. So this is very important. So we've talked about previously the ability to direct an employee to work none or some of their regular pattern of work. This is a request to work a differing pattern. As an example, I work or you work, an employee works Monday to Friday 9 to 5. I now request that you work Saturday and Sunday 9 to 5. You are normally only working Monday, Wednesday, Friday. I now need you to work Tuesday and Thursday only. So it's a request to work on differing days or at differing times to what is ordinarily worked. Now, it's important to reflect that the reason why this is a request, not a direction, is that employees may have obligations to a secondary employer. Employees may have care responsibilities of a child, disabled adult, etc. And as such, there can't in all circumstances be a direction which can be complied with. The interesting thing with the legislation, though, is it says that where a request is made, an employee must, that's the word, must consider the request and must not unreasonably refuse the request. So it's very interesting in that a request is made by an employer and then the obligation is switched onto the employee who must consider it and must not unreasonably refuse the request. So it's very interesting in that context. So we'll go through a few examples just to outline what the intention of these particular provisions are. So the first example is a dental clinic has closed down due to government restrictions upon procedures which can be performed. The clinic is now only able to perform emergency procedures. Can the employees be directed to perform those duties? So in short, yes. So effectively what's happening in a dental clinic is a dental practice may have operated 6 days per week performing dental procedures. Now there's a limitation which effectively means that only emergency procedures can be performed. Now, the volume of emergency procedures is generally very low. So in certain circumstances, what will generally happen is that an employer will now have the ability to direct an employee to work reduced hours, maybe that they only work 3 days a week, 2.5 days a week, whatever it is, up to the $1,500 threshold. What that means is it effectively reduces or removes the cost burden of the practice, meaning that the wage or labour cost is offset by the subsidy received. But it also means that that person is in the workplace performing services of value. Now, if there aren't emergency procedures to be performed, the employer can direct the employee to perform any other duties in that person's skill set to perform, developing systems, updating filing, doing quality assurance, WHS, training, development, etc. Or if there is nothing to perform, it's always open to the employer to simply say, nothing happening today, no emergency procedures, no ancillary or additional functions which I'd like you to perform. You're not required to attend today. Please spend the day with your family. Always possible. So yes, in those circumstances, we can change it. The second example is a retail business that closes stores due to social distancing obligations. You're now considering reopening some stores for limited trade, such as a click and collect, and there are services or work available in warehouse servicing online sales. Can employees be directed to undertake those duties? Again, yes. As long as the direction is reasonable and work can be performed safely, they can. This example, however, probably brings out one comment though, and that comment is where a business before these amendments had already stood down employees, they were saying that there was a stoppage of work due to circumstances beyond their control. I think we need to be very careful now that there is the introduction of the JobKeeper scheme, not to suddenly reopen the premises and give people work, which effectively may give rise to a dispute around the legitimacy of the stand down in the first place. I think what we need to ensure is that where there was a valid stand down prior to the introduction, we are saying that the operational duties that we're now performing are different, or they're differing circumstances as to why we're bringing people back. And in this retail example, it is common in retail. The foot traffic is reduced. We're now changing our operations to click and collect online, etc. So we've been innovative as an employer to create additional duties in light or within the restrictions that we're currently performing in. The third example is we have a full-time employee earning $3,000 per fortnight. With the downturn in trade, you need to reduce your labour costs. Can you direct the employee to reduce their hours? Well, yes, we can. As long as we're an eligible employer, we've been approved through the application process, yes, we can reduce those hours of work. And the intention is that we can reduce them at a level that we're comfortable with. Now, we can reduce that person's hours of work right down to $1,500 per fortnight, such that that person's cost is cost neutral, the labour is cost neutral. Or if there are meaningful services and you're comfortable, you can reduce it down to $2,000 as an example, meaning that effectively the cost of that individual is $500, given that the subsidy of $1,500 continues. As we've mentioned though before, there is an overarching obligation of reasonableness, and that is where there is a direction. The employer can only provide a direction if it's considered reasonable in the circumstances, and we'll get onto that in a moment. The other element of reasonableness comes from an employee's obligation to consider any request. Yeah? And remember, an employee can only must consider and must not unreasonably refuse. In relation to directions, however, an employer has an obligation to consult. So this is a reduced framework, not the consultation provisions under the award or any enterprise agreement. This is different. This says that where there's a direction, and remember the directions, there's 3 of those directions we've outlined previously, the JobKeeper enabling stand down to work none or some of regular pattern of work, duties of work or location, there must be a consultation process, and that must entail a written notification or record of that consultation and at least 3 days advance notice of the intention. So that is, we must have a conversation with employees outlining the direction. We must confirm that consultation discussion in writing. That's a must. And we must maintain adequate records of any further consultation discussion. And the written notice of intention of the direction provides no less than 3 days notice. Yeah? Now, of course, the 3 days notice can be waived upon agreement with an employee, but that's the absolute minimum in terms of the obligation requirements. Now, why is this important? It's important because effectively it's a condition of the Act, and obviously we need to comply, but moreover, there is going to be a power of the Fair Work Commission to hear disputes from either employers, employees, or unions. Now, most of you may be aware that the dispute provisions of the powers of the Fair Work Commission are rather broad. That enables them to arbitrate where necessary, but it effectively is pretty quick and easy to bring out on a dispute. So where we see the disputation now in a workplace level is that an employee or union will challenge a direction of an employer on the basis of reasonableness. Now, what is reasonable turns on the circumstances, the size of the organisation, the amount of notice given, the nature of the request, the significance of the request, the circumstances or framework in which the business is operating, etc. But one of the factors which the Fair Work Commission will look at is the extent to which it's complied with its overarching consultation obligation. So we need to make sure that we're really strictly complying with this to ensure that we're keeping a record of all discussions, the record of the consultation discussions are provided in writing, and that we provide at least 3 days notice. If we don't do all of that as a bare minimum, I don't think we'll have much chance in convincing the Fair Work Commission that the direction was reasonable in the circumstances. Okay. The converse point to consider with that as well, of course, is, as mentioned, the employee has an obligation, must consider any request, and that's a request to vary days of hours of work and a request to consider annual leave. And they must consider it and must not unreasonably refuse, is the language. An employer can likewise raise a dispute with the Fair Work Commission where an employee, in the employer's opinion, has unreasonably refused a request. Yeah? So again, in the context of a request, there's no formal consultation obligations, yeah? But there is still the ability to go to the Fair Work Commission and raise a dispute. So the consultation, the formal consultation, notice and record requirements only relate to where you provide a direction. Requests, there are no formal consultation requirements because, again, a request of its nature is a fluid discussion between the parties and therefore there's no real need for it. Okay? The next element is in relation to annual leave. With annual leave, again, this is a request. An employer can request an employee take annual leave, but on a condition that the employee retains a balance of at least 2 weeks. There's also the ability to effectively have employees or take annual leave at half pay. So this is a really important introduction. It means that effectively the suggested amendments to the modern award system is no longer required, and it's a really important amendment. But remember, employees are required to reasonably consider and must not unreasonably refuse any request. Yep. Before I go into question and answers, there was one thing that I would like to address. It has been a source of ongoing questions from our perspective. A lot of clients are raising this. Is the the cash flow timing of JobKeeper payments, particularly for businesses who have already stood employees down. Yeah. Now, it is, we appreciate, an unfortunate consequence of the JobKeeper payment scheme that it appears currently that an employer will need to pay an employee first and then be reimbursed by the government through the JobKeeper scheme fortnightly in arrears. And indeed, the first payment is to be made on the 1st of May, backdated to the 30th of March. Couple of things with that. Because there's still a degree of uncertainty, and we are strongly suggesting that all employers not pay employees, eligible employees who are currently stood down until such time as the formal application process has been made and approved. So don't lock yourself into any agreed financial structure or arrangements until such time as you've made an application and been approved, firstly. The second thing is that we have been trying to seek clarification from the government on an urgent basis to consider this cash flow timing issue. As yet, as I've mentioned on a number of occasions, we're still waiting for these rules to be tabled by the Treasurer, which we do anticipate today, which many of us will be digesting over the course of the Easter long weekend. Unfortunately, however, some of you may have seen last night that the Treasurer was on late news. I noticed him on Channel 7, on the late news, and this particular cash flow question was raised with the Treasurer. In response, the Treasurer indicated that he had been in discussions with major banks who have agreed to provide liquidity and commercial terms on a short-term basis to meet the cash flow requirements necessary through the scheme. So whilst he didn't directly answer the question, I think that comment indicates that it is likely that employers will have to pay an employee first and then be reimbursed through the scheme. We are waiting, however, for that detail to be confirmed in the rules. The second element with that as well is that a request has been made from the government that if there is an arrangement or understanding with the major banks, that those details and terms be released so that they're understood. But that's one aspect, I'm sorry, that I wanted to raise, that unfortunately we currently don't have any confirmed position on, and I know a lot of businesses are asking that question, so I just wanted to bring it up front. Yep. So, a couple of questions, and please bring them through. Where I could, I've gone through and answered as many questions as I saw coming through. But I'll go through quickly and answer a few questions, etc. So the question is, do we have to reflect the variation in writing, such as reduced hours of work, change of place of work, etc.? Yes, we do. As I've mentioned, where there is a direction, there is an express obligation to maintain written records of those consultations, and you should be confirming that in writing. We are already in the process of preparing template documents for our clients, which outline the discussions and confirm the reduced hours, varied place of work and varied duties, etc. The one thing that I think should be fluid is the duties. Every time you ask someone to do something different to what they're engaged to do, I don't think we have to give them a separate directional letter. That can be relatively fluid, but certainly place of work, certainly reduced or no hours from their regular pattern needs to be confirmed in writing. Yep. A question is, what happens in a company structure where you have separate employing entities to the parent entity? I believe that the question is more in relation to eligibility. Where there's a group structure, all subsidiaries will be taken as one for the purposes of JobKeeper scheme, where they typically are a group structure for the purposes of reporting tax. So that means, let's assume you're a group structure. effectively, through that group structure, the group consolidates revenue for the purposes of reporting and paying tax. Then all the subsidiaries will come together for the purposes of considering the turnover requirements, so whether they are below $1 billion, above $1 billion, but also whether they're required to meet the 30 or 50% test, obviously. Assuming that there is a turnover on less than $1 billion, that means each subsidiary would need to satisfy a reduction of 30% to be eligible for the employees employed by that subsidiary. As I said, however, there is an invitation both by the Treasurer and the Commissioner of Taxation to bring forward or consider exemptions where there is an unexpected exclusion or unfairness. So where we find that complies in a group structure, I'd be identifying that. I'd be bringing it forward. I'd be identifying why it's unfair to exclude a particular subsidiary within a group for whatever reason. They may carry an increased percentage of turnover. I don't know, bring it forward and consider it. Question around the treatment of superannuation. I think we've gone through this in previous slides, so I didn't really want to spend a lot of time on it today. But in short, superannuation will be continuing to be paid upon a wages element. So that is where an employee performs services in the workplace and getting paid for that by the employer, and superannuation is payable upon that. Where, however, there is no work performed, an employee receives $1,500 subsidy per fortnight, or there's an element of the top-up up to the $1,500, then the top-up or the complete JobKeeper scheme is not subject to superannuation, and superannuation is voluntary. So, in effect, think about superannuation in three examples. An employee earns $3,000 per fortnight from wages and duties performed. Superannuation is payable upon that $3,000. An employee earns $1,000 in wages. They will continue to receive $1,500. That is $1,000 in wages, $500 top-up. Super payable on the $1,000, voluntary on the $500. An employee does not perform any work or services and therefore does not receive ordinary wages but continues to receive the JobKeeper subsidy of $1,500. There is no superannuation on that sum, which is completely voluntary. Again, a lot of questions around eligibility requirements. Our business has only dropped by a certain percentage, which is less than the required threshold of 30%, etc. Again, I would strongly encourage you not to take the 30% as a hard and fast rule, particularly where there is any explanatory basis upon which you have failed to meet the 30% requirement. March in 2019 was a particularly successful period. It's out of cycle. It's not reflective of all other months in 2019, as an example. Or we've not experienced a requisite reduction in March 2020 because effectively our revenue was earned in earlier months of January, February, etc., and therefore we've not experienced the dip, but we expect the dip to occur in subsequent months, May, June, etc. Bring that forward. Anything you can do to show that there is an non-comparable arrangement, that the two periods are not comparable, or there's an unexpected exclusion or an element of unfairness, raise it. The value of the subsidy is so high in terms of a value to a business that I would strongly suggest that all businesses consider raising an exemption request with the Commissioner for Taxation. Just going through a few questions around tax treatment, which I've already dealt with. It is a taxable payment, so that's already dealt with. A question again around, does the change in the Act now remove the obligation to consult about workplace change in their employment hours, days of work? Again, I think we need to be very clear that their obligation to consult remains where we're asking directing an employee not to work all or some of their regular pattern or agreed pattern of work. The obligation to consult remains. Where we're asking or requesting an employee to work a varying pattern of work, then there is no formal obligation to consult, because by virtue of the request, it's a consultation process of itself. So again, another question around how can we potentially compare revenue to last year where new projects, programs, business lines, etc., have been introduced. Again, all I can say is that the comparison of revenue needs to be on a like-for-like basis, and the periods need to be comparable. Again, the Treasurer and the FAQs, which have already been released, clearly indicate that there is a broad discretion on the part of the Commissioner for Taxation to apply an exemption. There is also, through the anticipated rules, a broad power and discretion on the part of the Treasurer to vary eligibility rules. So in the circumstances that I've just outlined, where new programs, revenue, etc., have been introduced, I think there's a legitimate argument that the two periods are not comparable, and what you may wish to do is apply for an exemption on the basis that the additional revenue experienced in this year, this March, by virtue of the programs introduced, should be excluded, and therefore you're undertaking a like-for-like comparison. So again, would strongly suggest to any business that clearly doesn't fit within the eligibility criteria to effectively consider that. Really interesting question that's just come through, and it might be our last one for today, I'm sorry, as we approach 4:30, is can we stand down most but not all employees? Yes. The beauty of this scheme is that, remember, as I said at the very beginning, the definition is it is a JobKeeper enabling stand down, not a stand down. Yeah? So a stand down under the current Act is that there is a stoppage of work due to circumstances beyond your control. A JobKeeper enabling stand down is that if I'm an eligible employer, I can direct my employees to work none or part of their regular pattern of work. Now you can apply that on a differing basis across your workplace. So, you may ask an employee to come in and work all of their regular pattern of work. You can ask others to work 80%, 60%, 40%, whatever it is. The only thing which I say to that is that we have to be careful not to apply that discretion in a discriminatory fashion. Yeah? So we can't apply it where, as an example, there is an inadvertent detriment provided to certain categories, women, disabled, ethnic minority, etc., and we're applying that. So where we're applying any form of discretion on a legitimate basis, there's no requirement for you to stand down all of your employees. You can consider what duties are performed. I would encourage, though, again, with this question coming up, if you're an eligible employer, use the opportunity to consider what work you can create. Yeah? What can you create for your employees so that they are meaningfully engaged, remain connected with the workplace, which is the intention of the scheme, and are providing services of value to you so you can take advantage of the uplift. And I can keep saying this, take advantage of the uplift when it comes up. So whilst there may not be apparent duties because there's a reduction in services demand, etc., think about ancillary tasks, projects, functions, systems, tasks which you've always wanted to do, creating business development plans, target lists, initiatives that you may wish to implement once these restrictions are lifted, because then you've undertaken a great deal of work which will place your business in a fantastic position to take advantage of the uplift once these restrictions are lifted. So that being said, 4:30, I do thank everyone for their attendance today. I hope that you have taken value out of the presentation, and these presentations will continue, of course. As I've mentioned, we are hotly anticipating the rules to be tabled in Parliament at some stage today. We'll, of course, dissect those rules and schedule further webinars in the course of next week so that we can keep people informed. We do appreciate that this is a very trying and anxious time for many managers and business proprietors. So do, pay close attention to our alerts and notifications, which are designed to provide basic, clear language guides to our clients and valued partners. And of course, if we can be of any further assistance at any stage, or there is a question which is more confidential that you would like to deal with directly, please don't hesitate to contact myself or any of my colleagues in our offices in Sydney, Melbourne, or Brisbane. Thank you very much. Hope everyone has a safe and socially isolated Easter, and I look forward to speaking to you all next week. Thank you.